All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. We're looking at a market here today that opened up higher and has just continued to grind higher the entire day. There has not been any kind of real sell spell that has stepped into this market. It has been all up all day, and you see a little bit of boost in futures or the market, and then it'll pause, and then it'll boost a little higher, and then it'll pause, and that's about it. I mean, here's the 1 minute chart of the S&P, and this kind of shows, since not quite the entire day, but the last 3 hours, you can see the biggest pullback here was about 6 points, and it's generally making these boosts, plateauing, and that's what we are seeing out of the market as it continues to push into new highs, here as I speak, and we are seeing the S&P up 1.4%. We're seeing small caps up 1.5%. You can see a divergence today, though, in the small cap, large caps. Here on the minute chart, it's very clear. Small caps have not set a new high throughout the day. In fact, they're slightly below their high here for the day, while the S&P, the SPY, is hitting new highs for the day. So we have a little divergence there, but it's not a huge one. The Qs are also hitting new highs for the day. You look at something like emerging markets, new highs for the day. So, there's a little divergence there, but nothing that I make too much out of overall. The bottom line is, we talked about it yesterday, the metrics are controlled by the bulls, and there's no change in that today. The bulls still control the metrics. In fact, they control the metrics to a point that is incredibly overdone. It is one of those where they're not showing any sign of relinquishing. And they continue to hold on to them. You can see the bullish percent index continuing to track on higher here. Transports have been a real bright spot in the market the last 2 days, we see truckers, popping up here the last 2 days as basically a new exchange is kind of being created, a futures exchange to where the truckers can kind of stabilize some fuel pricing, up to 18 months out. So that's a general kind of positive for the truckers for transparency, and kind of less what's the right word here? Less dependence on the day-to-day fluctuations in the pricing there with fuel. The airlines already have such things here. You see the airlines up a little bit, but this is truckers, rails. CSX is having a beautiful day here today. Had a real nice day yesterday, and then gave it on up into the close, but then gapped up this morning, and it's been green skies pretty much ever since here. Now, yesterday we talked about some of the signals that had come into the market, some of the the trend rider bull signals like we saw on Vulcan Materials, and obviously any bullish signal from yesterday is going to get some follow through to the upside here today, we are seeing that take place, but some of the stuff that we talked about on the downside that was kind of giving some signals, there's some lag in those stocks here today. Some of the things like a Disney, definitely lagging today. Morgan Stanley, not to the same degree of lag as a Disney, but still below the 7 here today. You look at something like, we talked about the Mexican ETF, the EWW. It bounced this morning, popped and rallied, and has pretty much been giving up the entire day here today. So some of those downside elements that we saw starting to come in yesterday, there's a few of them that are popping, with the market. There's some others that today, though, are lagging, pretty hefty or heavily here with the overall market. But we also talked about yesterday these kind of dark cloud or bearish engulfing candles. We saw it in Boeing, right, where the stock gapped up yesterday and sold off the rest of the day, ended with this kind of red candle. Those are being erased today. pretty much across the board. They are just being absolutely erased from a Microsoft, which had the same action yesterday and getting absolutely erased here, to a Home Depot, same action yesterday and getting absolutely erased in a major way here today. Even a Micron, which, to a little different degree, little bit of a different type of stock, but, getting that same type of gap up type of action. And it is a market where, from a technical standpoint, it is total bullish control. The only argument the bears have is overdone. That's the only argument the bears have. There isn't another good argument to be made. We can go and slap some oversold indicators. We can go start looking at resistance levels on some stocks. That's all the bears have. They don't have anything else. And we haven't seen a market like that in a while, where the bears just pretty much have nothing. In fact, it's one where I think the last time we saw this type of market was kind of over the course of the summer in August or September, and I haven't gone and checked the numbers yet, but that's my guess is kind of the last time we've seen this is somewhere back here in August and September. But overall, you could see market continues to push on higher, continues to grind higher. I know there's a lot of big deals being made out of the news and the U.S. government and the wall and all, and sure, they all have an influence. They all have a factor, and if you want to try to say, well, China-U.S. trade relations are this percentage and, the U.S. government's this percentage and Brexit's this percentage, you can go ahead and try to play that game. I don't think there's much value in it. All of those have something to do with everything as they scale the wall of worry. We also have the Fed in Powell came out with some comments here today as he was speaking, and I posted them in the Trader Minute feed because I found them very interesting in terms of the fact that, wait a minute, this is a very different sounding Fed chairman. Talking about how strong the economy is, how the metrics are showing that this is a very strong economy, and it was a totally different tune than what he was tooting 3 and 4 weeks ago. This is the tune that the Fed was tooting back in October and November when they were raising rates. And to hear that tone or hear that change in language or rhetoric was very interesting. Now, the market didn't respond to it in any sort of negative fashion. In fact, they responded to it very positively and whatnot there. But a very different tone. Very different tune. So it's kind of like this Goldilocks Fed right now, where where anything the Fed said back in October, November, or December was taken negatively. Anything the Fed has said so far here in 2019 has been taken positively, even when the messages have, varied a little bit. And generally, it's been about the same. Today was where, we saw some of the biggest variants really kind of come into play. Now, as far as just some individual moves and individual things out there, going on today, there's a ETF, the IYZ, which you can see piercing up the upper bands expanding in a very bullish fashion here, and the IYZ is the U.S. telecommunications ETF. And if we come in here to IYZ ETF, and we look at, the components here to it. Let's go components. Forgot that. There we go. Telecommunications, you think of AT&T, you think of Verizon, right? As far as the stocks in it. But you can see here, we have AT&T, we have Verizon, but 14% is also Cisco, right? So this is kind of a Cisco, AT&T, Verizon ETF. 43% of the ETF is made up of these stocks. And then you have Motorola, T-Mobile, that make up the other 8%, but pretty much 50% of this ETF is in the top 5 holdings here with it. And in a, moving in a very bullish fashion. Now, what's interesting about it is a company like AT&T today is setting a bullish Katie signal. Has a bullish Katie signal where the 3-7, is crossing over. Now it's a medium consolidation. It's not a low consolidation signal. It's a medium consolidation signal. So there is some consolidation risk associated here, but definitely has a stronger signal than it has. Here's Verizon. It's not setting a Katie signal, but it also has that 3-7 crossover action. T-Mobile has some nice buying into it here today. And what's interesting about that is Democrats came out with a report here today, basically opposing the merger between T-Mobile and Sprint, and talking about how it would hurt jobs, it would hurt competitiveness, and they have concerns there. And we have seen these stocks continue to climb on higher, even in the face of that report. But an area with some very bullish charts. FFIV, nice little 3-7 crossover. Cisco here pushing into a new short-term high, dealing with some of the resistance from earlier this year. But Cisco is one of those stocks where it's trading back to the highs that it was back in October, November, December, and that's not the norm. Right, that is not the norm. Cisco's definitely been an outperformer here over the last 4 to 6 month type of period, and we're seeing some real strength in that ETF and in those stocks. Here in that telecom space. I've priced some of them out. As you guys know, I do have a position in AT&T, but it's a long-term, position just based off fundamental valuations. That it's anything below 30 is just dirt cheap. It hasn't gotten any sort of real major thrust above 30 over the last while, but I do expect that will ultimately come. Now, we have a trend rider bull here or a Katie bull signal on AT&T. We also have one on Schlumberger. And we've seen the energy names. In fact, yesterday, a lot of these energy names had some bullish engulfing action, even with oil lower. And this morning in my note, I mentioned oil was trading on higher, and that was a pretty good sign that the move in the market futures was based on economic hopes, based off of trade between U.S. and China, and maybe a little less political. But we see oil move up and down based off of hopes of, trade resolution there between the U.S. and China, which, the more time goes by, the more I just kind of wonder, if we're not talking about a 3 to 5 year thing between the U.S. and China, and ultimately the markets start to absorb it, start to understand that this is a very long-term process, not an event, but a very long-term process. But we have a lot of these energy names snapping up here today. The Schlumbergers, the Halliburtons of the world, trying to set this kind of 3-7 crossover action. Now, I'm not convinced in it simply because of the volume dynamic here, but definitely something we're keeping an eye on. Some of the big major integrated oils like the Exxons of the world, Chevrons of the world, they have better charts. Ultimately they have better charts in terms of volume patterns and gaps and just overall trends than do some of the oil services stocks. But we are seeing some generalized strength come in, but a signal there with Schlumberger. Now, the other area, and this is an area that we talked about quite a bit. In fact, did a pretty extensive video on KB Home and the home builders, back here in January, and just talked about these things being buys on dips, and the options on them aren't the greatest. They're not as challenge friendly as I would love, but we are seeing a big boost here in the home builders, and these lagged the last 2 days and are getting a big shot up here today, whether it be KB Home, whether it be Lennar, whether it be Home Depot. The entire space is seeing a big push up here today, and pushing into new short-term highs for many of these. But we talk and we look at the fundamentals of a company like KB Home. We are still talking about a company that's trading at a PE ratio of 7. and a forward PE ratio of 7 and a book value of 23. So this move isn't even taking KB Home back to book value. And, these are definitely areas where if you're looking to get exposure into this market, you don't want to chase the typical Apple, Amazon, Facebook, Twitter type of, tech craze. There's some real value to be had, in some of these home builders still, even after this move today. And I do think this move today only confirms, some of the fundamental elements that are here. But this is one of those areas where we're not seeing fundamental erosion. We are seeing fundamental erosion in a lot of the big multinationals and a lot of the big tech names. We're not seeing fundamental erosion in some of these. In fact, they are actually seeing some nice fundamental improvements here over the last little while. We did see KB Home earnings here on January 9th, and the stock sold off a little bit from there, but has been a buyer's market ever since. And this is a company that's still about 10% shorted, so plenty of short squeeze to be had, here with this. And in fact, some of the stocks that are moving up nicely today, have a pretty interesting short component to it. Here as well. But anyway, those are some of the things kind of going on out there. I don't advocate buying a home builder here today. These home builders are to be bought on pullbacks. They are very difficult to chase. If you go back and just look at a 5-year chart of home builders, you're rarely rewarded by chasing it on a day where it's up 6%. Occasionally you are, but it's not the norm. So, I'm not advocating buying it, but I am continuing to advocate having it on your watch list, having it as a group to look to be buying, as things pull back. Now, for me personally, kind of where I stand as far as kind of the bull bear tip of this market. I do think the market's in for a sizable pullback. But as I talked about yesterday, there's no confirmation. There's zero technical confirmation of that coming into the market here just yet. And, even some of the stuff that, I watched or was talking about yesterday that, hey, if it started to break yesterday's lows today, would give some technical confirmation. It's just simply not doing it, right? So I don't have that confirmation here in play just yet. For that, any kind of bearish position that I have is going to be a longer-term option and something that I can add to over time, or something that I can subtract a little, or kind of play with a little bit, and that's what I am looking for. Now, the last thing I want to show here this morning is Under Armour, and we've talked about Under Armour for a long time, and where I stand as far as Under Armour goes. I think it's a very bullish turnaround story. We talked about it early last year. This was one of those that kind of had the KB Home type of situation, had this kind of situation where they have stunk it up. Things are bad. They're not very good. But the comparables are very easy, and it's not going to take much to turn around, and they're talking about a turnaround plan, right? And so we've seen Under Armour have its ups and downs over the last while, and made this really nice run here in April and May. But today gapped down on their earnings, and if you go and you read the earnings report, it's very evident why they gapped down. When you're dealing in a North American market and you talk about North American sales contracting, that's not going to give people a lot of confidence, right? And they did. They talked about U.S. sales contracting. But if you look beyond that, you look at everything else, there's some those positive themes that have been with Under Armour are continuing here with Under Armour. And, to me, this is still a very bullish story here for 2019, and one that has a long way to go. This morning I picked up a few shares. I looked at the options. They weren't tradable, unless you're day trading them or something like that. But overall, this is something where it belongs squarely on a bullish watch list. I don't think it's chaseable right here. I don't think this is something you look at and say, well, those earnings were so good that it's just going to kind of keep on going up, 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 and away. But I do think that today's price action, is very reflective of the shorts kind of pretty much getting the rest of their story. They've gotten the story that they've gotten the drum that they've been beating. It's happened, right? What drum do they have left to beat? Not much of one. And I think that's the case here with Under Armour. I do think it will be subject to a few downgrades in the coming days. So that is a risk factor here. But I think it'd be very buyable, after that. And, I kind of lump it in this kind of category of Chipotle. I do think Chipotle has a greater upside associated here with it, but Chipotle also has a greater risk, factor. But I kind of lump it into that category, here when it comes to Under Armour. Okay. All right. As we get into the close, and again, I'm not going to talk about challenge trades and, all of that with it here with this challenge. I'm going to treat them like my personal trades, which, I don't hyperanalyze. But I am looking at a few trades here into the close today. But as I mentioned earlier, my bias is a little bearish. I don't have any bearish confirmation, and so to add more to a bearish side is going to be very difficult to do into the close here today. Unless we see something change, unless we see something, turn, I probably will go into the close as I am. And look for some of those confirmation elements, to come in the coming days here with it. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.